Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a minute past midday here, which makes it 1100 UTC. Big shout out to everyone joining the stream live today. You can see a lot of friendly and familiar faces in the chat, as well as to anybody new that might be tuning in here for the first time. And of course, anyone that watches this on recording. So, first things first, we're going to put a bit of, or as we do typically on a Monday, we're going to put a lot more focus on to Bitcoin today as well, also to cover kind of any educational points that you guys and girls want to go over. We're going to then jump back in on Wednesday to our Altcoin Request Wednesday and really look at any charts you guys have got. So as we're going through the stream today, guys, if there's anything that you hear or you hear me talk about that you don't fully understand, I really do always encourage you to just drop something in the comments. I'd be more than happy to go through it. We've got a really, really cool, very well-educated community here of people of all different kinds of level of traders. So don't ever feel like you're asking a silly question. There's no silly questions, right? And I'll do my best to get around to absolutely everybody. So first, just a couple of good mornings to Queen, how lovely, always bringing me the roses. Wince, good to have you on the stream, my friend. Craig, I hope you're doing well too, mate, and I hope you are not getting too caught up in all of your work meetings. Whack, always a pleasure, mate. Yeah, feeling a little bit better. I just cannot seem to shake this chest infection thing that I've had, but yeah, very much more so on the mend. Managed to get a relatively relaxing weekend in for a little bit of recovery as well. Obviously, Super Shogun, great to see you back on the show, my friend. I hope you've been keeping well and learning. Good morning to you too, my friend. So, basically, what I like to do on a Monday is kind of share my thoughts with you, my overview on the market, what gives me my bias. I then look to execute on that bias throughout the week. And we're just going to start on a higher time frame. We're then going to start blocking it down and going through lower time frames. So for me, it's really important that we get the high time frame analysis in perspective. And I'm always asking myself the question of where is price reaching for? Where's it trying to get to, right? And then what we can do is once we've established that on a higher time frame, we can then look for lower time frame, middle time frame signatures, areas that price is likely to find a reaction. Then we drill down into our ultimate lowest time frame, which is our execution time frame. And then we look for either our reversal patterns, if we're looking to reversal trade, or we're looking to kind of flip with some continuation plays. And we're going to look at both of them in detail. So again, guys, today's really about questions and really kind of deep diving into anything that you guys have in your minds. Whack, I am feeling better with this. In the middle, moving condo, painting and decorating, you absolute legend. Well, I bet we've had a 30-degree weekend over here, which I know for you guys is like, winter. But good Lord, I revamped my office. So I've got a standing desk now, one of those automated standing desks, just to really give my back a bit of a rest. We obviously do a lot of hours in the chair. And even doing that yesterday in 30-degree heat felt ridiculous. So I feel your pain, mate. I'd say air conditioning up to full. And obviously, if there's anything you miss or anything you want to catch up, mate, please do feel free to just message me inside the nest and we will deal with that. Ginger, honey, lemon, hot water. See, I've got a cup of it right here, Not even joking you. I literally live on that when I'm unwell. That is my absolute go-to. So very good advice. Right, guys. So like I said, questions, please feel free, drop them in the chat. I'm just going to make this a full screen. No reason for you to guys see my mug or my logo taking any unnecessary space. And this is the information that I received in the weekly Bitcoin report last night. So members of the Nest, I believe as well, if you join for free, if you're part of the public group or, if you join up and sign up for the newsletter, I think you get the daily reports as well. And our team of analysts, who I'm incredibly proud to work alongside, we all take it in turns one day a week to release Bitcoin reports. So you get the thoughts of different analysts, different styles on the market. It's a really, really good medium. But this is what I released last night. I released the 4-hour version on Twitter as well for people to have a read through. But on a weekly scale, what am I looking at? Now, obviously, we've got a lot of levels up here, right? But I'm not going to start going and marking up all of these or these, for example. What I'm most interested in is where price is currently looking to head. So for me, let me show you this, right? So if I'm looking at this as a premium discount situation, so premium discount is something I learned off of ICT in his original core mentorship many years ago. He's got a new mentorship out now, I think 2022. I'm very fortunate to learn a lot from him, Trader SZ, as well as a few other people. So a lot of my concepts in terms of price action are built around that. So one of the things that I'm looking for when I'm talking about premium and discount is if I'm looking at a a leg. Yeah. So if I'm looking at this as a price leg, why price has come up to here, taken liquidity above these highs, ultimately sold off, clearing out the liquidity below these lows. It's continued to go down, and then we've broken market structure back to the upside here. So if I was to take this high here and call this the displacement leg if you want, or our kind of trading range. Now, I'm going to show you these principles on the lower time frames as well, but the kind of simple idea, and I always recommend going to the source of this education. So if you want to know more about premium discount ranges, then I would definitely go to ICT's mentorship. It's all available on YouTube. But for me, what makes a lot of sense about this is if we're looking at it as a risk to reward perspective, then we've got the upper portion, the upper half of the range here, and the lower half of the range here. Now, we can see that price set a higher low, higher high. So we briefly broke structure to the upside here, taking this liquidity. We then ultimately broke down, taking liquidity from the lows, and then we changed market structure. So for me, that's how I get an idea of where I want to take this range from high to low. Or if we were going the other way, then low to high. But the idea is that we favor shorts from the upper portion and we favor longs from the lower portion, right? Now, the other thing that this plays into is when I'm thinking about where price is probably heading, price being driven by institutional buyers, algorithms, banks, retail, this whole collective of people who are buying and selling, then as we saw here, once we got this market structure shift here, and then we got this breakout, the reason that this fair value gap was so key for me, and if you watch back on some of the other videos, you'll find the analysis that we've done from many, many weeks ago, is the fact that this move here, this fast move here that left this inefficiency, this imbalance, the market likes to rebalance these, right? So if we just take a moment to just look at that theory and principle here, and I'm going to do this very roughly, right? But when we look to see that we have this fair value gap here, now, actually, do you know what I'm going to do? Is I'm going to run this all the way across to here. So this fair value gap. So the fair value gap is between the three candles. Again, I'm not going to teach you guys how to suck eggs. I know a lot of you are on the stream very regularly. If you have got any questions more about the technical nature of the FVGs, I'm more than happy to go through it. But it's the three candle pattern. If we see 1, 2, 3 candles, the gap between the wicks on candle 1, so the bottom of this, and the high of candle 3 in this case, if those wicks don't overlap, like you see in here, for example, this nice price structure, which is very efficient, prices overlapping each other, filling orders, moving. When you get these gaps, price often likes to refill these. So we can see this fair value gap here. See how price was drawn up into it before it then sold off further. Well, we're not saying that this is going to get completely filled. We're not even sure if it's just going to get touched upon before a reversal. But what I would say is that when you're on here, then if you've got this, you've got a key targeted point of interest, right? So you can wait for price to come back into this area, and then you can start to decant down onto lower timeframes in terms of execution, all right? Yeah, absolutely. From somebody in the chat, learn everything from ICT. Yeah, everything's available from ICT on YouTube. You've got the original mentorship. I know he's redone one. Michael redid it for 2022 as well. There's a lot of really good, valuable information on there. So we're using our fair value gaps as an area or a point of interest that we can look for price to pull into. Now, when we're in there, we can then move to a lower time frame. We can look for our breakdown patterns, etc. With the expectation that we're going to stay with the trend. Yeah, trend is the friend until the end, is one of the sayings. So we want to make sure that we're on the right side of institutional buyers, right? The bigger players that are looking to affect the market. So why is this important here, and why am I rambling on about it? Because if this is our trading range, if this is our leg here that we're looking for, then the fair value gap, as we had down here, when price broke down, retraced, we looked to see if we were going to get our breakdown pattern. We did, and ultimately price traded lower, down towards the liquidity resting below this low. Well, if we weren't expecting this and we weren't looking for the triggers for that, then what we would have wanted to see was price to move through this, retest it as support, and then we can look to say, okay, where are the fair value gaps, where are the order blocks higher that price could be looking to target? Sometimes it's easy to forget that no matter what market you're trading, it's about the ideas of buyers and sellers, right? And what is fair value for that price, So it's supply and demand. As in, if you have a lot of supply for something and very little demand, then the price of that object becomes cheap because Not a lot of people want it, and it's very oversupplied. Now, the opposite is true, right? So if you've got a very high demand for a product but a very low supply, then that drives the price of that product up. So that's technically what we're looking for in the markets. So from here, we can see how price got into this structure, came up, set our higher low, higher high, price retraced back down into this fair value gap here. Let me just get rid of this one for a second, actually. Yeah, so the same as we were looking at that one here for a bearish reaction, which we got, we were then looking at this one here, this expansion higher, for price to come down, rebalance this, and then we're looking in here for our bullish reactions. And then we're saying to ourselves, okay, well, where's the liquidity higher up? At the time, it was this higher. Yeah, and why this high? That's the most obvious and clear high. That's where people will have stop losses, right? So that's where people that were going short up here are saying, okay, if I'm wrong, I'm going to put my stop above this high and I'm targeting lower prices. Now, when price breaks this high, yeah, or any key high or low, and engages with those stop losses, if those people are short here, those stop losses are going to become buy orders, right? Now, the other thing that it's going to do is trigger algorithms and breakout traders into entering positions here as well. So as price goes up, what you're ultimately creating up here are a lot of buy orders. Now, where this gets counterintuitive is that also gives an opportunity for very big players to reverse the market in situations like this, because it creates this, let's just kind of visually put it on here, right? Let's just say we've got this huge amount of buy orders being triggered up here, right, which we'll do in green. Now, originally you'd think, okay, well, there's lots of buyers here and it's going to shunt the price up, right, push price higher. But actually, by creating such a large amount of buy orders, if institutional players, larger accounts, if they really want to short this market here, that allows them to get the majority, if not all of their orders filled here without the risk of too much slippage, yeah? Meaning that if they decide to take all those buy orders and fill them with their sell orders, then you can often see these points as where the market reverses. They're also natural take profit points as well. So that's what we see on the charts when we look at these overlaps of high and lows, okay? Let's just clean that up a second. Perfect. So with that principle in mind, we're just going to look and we're going to overlay this on the different time frames as we move through them, right? So for me, the ultimate high time frame on this is the weekly for crypto. Certainly go back a lot further than that. I do look at the monthly, the quarterly, and that as well. But for the purposes of this, the weekly is our real kind of high time frame chart. So what's this telling us? We saw last week we had this bullish expansion, right? So prices run very, very hot all week. We can see that by how much volume. So the volume's in the body of the candle, yeah? So we can see here very, very bullish week last week. And we ran this key higher. So it's natural to expect some kind of correction, yeah? Now, we can see that we're still in a bullish market structure, so we have to retain our bullish bias here. And if I'm looking for the next kind of logical place that price could reach, I'm looking at these fair value gaps over here. And we also notice that we've got this key untapped higher, which is here, yeah? This is a key high because it's got two lower highs flanking it, yeah, forming that. So if we've got the confluence of that and the fair value gap above, then it would be fair to assume, okay, if price is going to continue the bullish price action, maybe we could expect a little bit of a pullback here, and then for price to look to move up. Now, when we get up here into premium, like we were talking about before, that's when we start to think, okay, we're starting to favor short plays here because the risk to reward then starts shifting into that favor. So let's clear this up for a second and let's drop this down onto our daily chart. So we'll get rid of our higher time frame premium discount range here. So now as we're looking at this, we're saying to ourselves, okay, now we see it in a bit more detail. We're here on the daily chart. We can see the weekly fair value gap. Price has pulled down into this. Now all we're doing is we're overlaying the same stuff on different time frames, right? But we're retaining the higher time frame bias. That's our context. So our higher time frame bias is that we're bullish. Yeah, we've got that market structure. And we can obviously see here after the recent move, once again, price came in, it took out the liquidity resting below these lows. Yeah, drew down into this daily fair value gap, which we can see the break between here and here, which was rebalanced. Price ultimately then came into this order block here, which is the daily down candle before the move higher. added validity into this because we also have a fair value gap afterwards. So we're going to draw that in here in blue. And this becomes our OBD, our order block daily. Okay, so what we're doing now is we're running through the kind of story of price. What's been happening to price? How's it been reacting? What's currently holding price? So what's capping the market? Yeah. So what we can see here is as we came up into here, ran some liquidity, price started to break down. You can see it continued its bearish structure down to here, where it's found support in this order block whilst rebalancing this fair value gap in here. We've then had this powerful bullish reaction here and prices expanded higher, ultimately targeting liquidity resting above here, here, and here, which is where we're currently resting. So if we're then looking at this as our displacement leg, right, same way as we did on the weekly, and we're taking our range and we say to ourselves, okay, if we want price or we're looking to price to correct down so that it's then down in discount favoring our long setups, then this is the one that we would be favoring. Okay, we're not saying it's definitely going to hit it. We just simply don't know. All we can do is overlay our technical analysis and then monitor price as it starts to develop. Now, there's no question, obviously, that this fair value gap here is also of interest. And does price always have to come down into discount or up into premium? Absolutely not. Yeah. What we're doing is we're saying that gives us the best opportunity in terms of risk to reward. If we're thinking like an institutional buyer, if we're thinking like, incredibly clever algorithms and trading systems, then it would make sense that price would want to be taken on board when the risk to reward makes the most sense. So that's what we're using our premium and discount range for. But it doesn't mean that has to follow. And crypto markets, as we know, can be especially volatile. So if price gets into here, and on the lower time frames, we start to see this positive reaction. We break market structure back to the upside. I'm not going to refuse to take longs in here as long as I get my entry triggers on the lower time frames. Okay. However, it doesn't mean that as soon as price gets into this zone that I'm just going to blindly long it. And the other flip side of that is it also doesn't mean that if price does come into here and we start seeing what we want to see, that I wouldn't look to long. But ultimately, if price does start to break down, then I would favor a breakdown into this area. From here, if we then see this bullish reaction, then it gives us the opportunity to get involved here, right? Where we can look for lower time frame setups that suit our trigger system. So for me, I want to see price engaging with a key level or with an order block or a higher time frame fair value gap. I then look to take it down to a lower time frame, right? And there, what I want to see is market structure shift. So in this case, I would want to see bullish market structure flip to bearish market structure for this pullback, flip to bullish market structure on the lower time frames. And then I want to see some energetic movements, right? Meaning that I want to see displacement when price moves, right? Which is something that we'll look at on the lower time frames. So in terms of the daily, what am I going to do if price just decides to run really hot from here? Well, for me, I haven't really got the odds aren't in my favor if I'm looking to enter a long up here, right? Price pulls back a little bit, gives us a trigger. We've got a point from which we can say, okay, it makes sense. Price has had a very expansive week. Price now looks to cool off, find a grounding, build some support, a base to then move on to from there. If we start carving through these fair value gaps, however, then the expectation is for a deeper correction, and then we look to the higher time frames for a break of market structure. Okay. So if we're now going to take this down from a daily, and let me just get rid of this, then the 4 hour is a really good time frame to kind of work on. And once again, by the way, for those that don't use these kind of dotted lines down the screen are session breaks. Okay, so if you just click on your chart settings here, under events, you can see here session breaks. All right, I'll turn them off for the moment on this time frame because we don't want it to kind of muddy up the chart too much. But what it does is just gives you a divider between your days, so you can see where liquidity is resting between like prior days high, prior days low. You can also look at it in terms of what it's doing on the weekly. So now we're going to just overlay exactly the same factors here that we've been doing below. We've got our high time frame draw on price. We know where our fair value gaps are. They're here and here. right? We can also see that we've got these lower time frame fair value gaps, right, that overlay, so we can nail these down and be more specific. So from here, what's going to give me conviction that price could be correcting deeper here? Well, once again, I'm going to turn to my fair value gaps here. And what this tells me is that price at the moment is in the middle of this, right? So this is our fair value gap, our H4, so our 4 hour. Now, until we get a close below here, yeah, and price starts to hold here and then break down again on the lower time frames. So you can see how we've got these wicks coming out of the bottom at the moment, right? We haven't had that close, yeah? If price comes down and we get that close in here, then we've got ready-made targets in terms of this low resting down here, being drawn into this fair value gap. We obviously have our high time frame targets as well. So what I would want to see here, and this is obviously on a lower time frame, right, but is the conviction of price to come down, take out market structure. Yeah, so continuation bearish. I would then be looking for an energetic move that breaks this low, yeah, leaving this one intact, because then that can become our first target. And then I'd be looking for a fair value gap within this displacement leg down for price to retrace into. This is where we could look to take our entries. Stops would be above the price swing high, and ultimately our first target would be this swing low as we look for targets lower down on the higher time frame. So that's how we would look to kind of break into that system. In terms of entries, I would be looking at, I know people kind of trade different time frames, right? But this is a very good example up here. We can see how price interacted with our high time frame level. Yeah, so we discussed that. You just make that a little bit bigger for you guys. Yeah, so this red line that's coming in here is the key high. We were monitoring that high, right, to see if we got a reaction here. And then ultimately, we swept the liquidity, we broke down. Look at the energy in this movement, right? Price broke down aggressively there. We then came up, set a lower high, took out the low below, and then price has ultimately broken down. Now, for me, as we came into this space here, right, then I also pay very, very deep attention to time of price, right? So I like overlaying a lot of my trading with traditional market hours. So you've got New York, obviously London, which for me, London starts the day. We come off the back of the Asia session, which trades through the night here in terms of London time. And then we're looking to trade London in the morning going into New York, which opens UK afternoon time. Okay, it's very high volume traded in those sessions. So for me, I also want to be aware of what price is doing in the particular session, and from that we can kind of glean some more information. So now we're down here on the lower time frame. What we can see is this is ours, obviously, from the 4 hour. We're saying what we want to see here. We can see price dipped below this, but see what's happened here? Price recovers back into structure. Now, the question here is if price is trying to get back above this fair value gap. Yeah, let me just get rid of this. So if price is trying to get back above this fair value gap, and we want to see this fair value gap reclaimed if we're bullish, yeah, so something like this, we see price pop out, yeah, and then wait, lower time frame for that market structure shift, yeah, and then something like this, we take out this high, we've broken market structure, we look for that retrace, and then we've got ready-made targets on the lower time frame. Remembering, obviously, we're down on a 15-minute now, so we would be taking on board our high time frame bias. We're looking for our triggers, but then we're looking to execute these, or I am, in terms of day trades. Okay, so I'm not trying to enforce my will on the market. What I'm doing is I'm studying the market, and the idea is that I have certain triggers, patterns, and reactions that I want to see at key levels. For example, this now. I could be bullish, I could be bearish here in terms of the fact that I'm expecting a deeper correction. However, my high time frame bias is bullish because we're still in a bullish market structure. So even though my high time frame is bullish, yeah, if I'm expecting that pullback, or if that's what I think can happen, then if we don't get this, if price struggles here and starts to break down again, and we get the opposite, we get that energetic move lower, right? Then what we can look for here is basically the opposite of what we've got above, right? we're looking for a confirmation setup in terms of a breakdown. Yeah. So as we've done here, we've got our 4-hour fair value gap. We're looking in here, waiting for this to give us a decision. Is price going to show strength, reclaim this? In which case, I think we look to target that high as a minimum, let alone the highs resting above, as we discussed previously. If we need to get above this line here and start targeting the fair value gaps on the higher time frame, then this gives us the base and structure to do that. Now, if we break down from here, and fail to show that strength needed to get above, what does that tell me? Well, it tells me that price came in here to find support. It found support because we didn't get those higher time frame closes below, but price has attempted to make this breakout and has then fallen back again. So now what I'm looking to do is monitor price through the London session, heading towards New York, which the key time for me starts in about an hour. And then in there, we could see that kind of decisive move. So if we do see that decisive move, whether that be to the upside or the downside, then I'm going to be there waiting and ready with the trigger setups. So in terms of those setups, let me show you some examples here. And we can stick to the 15-minute, obviously, guys, but remember, it's very dependent on the time frame that you're executing on. I typically trade the lower minute charts, so anything from a 1 minute, which I do use very rarely, but 3 to 5 minute is very much kind of a favored time frame for me. So let's just take a look at this, just as a very quick example, so I can give you kind of an ad hoc example of what you could look for here in terms of entry techniques, right? And how we can use these fair value gaps to kind of help pick our bias and kind of say to us what we're expecting to go on. So price is drawn down into this higher time frame fair value gap, right? We're expecting price to do, well, one of three things. Price can go up, it can go down, or it can consolidate and go sideways, okay? So if price comes into this area and we can see we've got a point of consolidation here, yeah, then if we once again turn our attention to our fair value gaps, we can see this high energy move lower, right? Price had started to gain some momentum to the upside, ultimately reached above this high and saw a very, very strong rejection. So if I draw that across, and I'm just going to do this in purple so it stands out a bit more. Now, once again, we can see price has come up, had an initial reaction here. Yeah, so price has rejected down, takes out the liquidity resting below these lows. Price ultimately then sweeps that down, but then has a very strong bullish expansive move higher. Now, what this also does is this completely shifts our market structure. Yeah, so the dynamic of the move changes. We can see we've had this impulse move higher. We can see we've taken this fair value gap that we were looking to suppress price, right? We now want to look at this and we want to see this act as support. See how we struggle to come back down below it here. Yeah. Now, what we use this fair value gap for here is what's known as an inverse fair value gap, okay? Meaning that this is a bearish fair value gap, we expect a bearish reaction. If we really carve through it and we see it flip to support, yeah, as we would do with any kind of support and resistance level, that then becomes our base here to look for higher prices. So what can we do? We can drop to a lower time frame here, look for this change in market structure and look for price to push higher, right? Or we can once again use this if we wanted to stay on the 15-minute and let's apply the same principles, yeah? So if this is our bearish fair value gap here, which is developed as price has come back lower, then what we're expecting is for price to cut through this, right? So, like we did here, look at when we inverted this fair value gap. What happened? We had this strong move through it, price came down and found support. So this bearish fair value gap should be suppressing price here, but see how it doesn't? Then what happens? Price runs hot, takes out this high, and finds support in this very area, yeah? So it's then within places like this that we can look on lower time frames for tradable setups, yeah? Whether that be a kind of classic technique, for example, if we were trading in here, then what you would want to do is a classic method that you would have here, if you've got a, say you've got a low set in here, and I'll draw that in afterwards, then you can look for moves like this. So if, for example, we had, say, a low here, yeah, you see price come down, sweep liquidity below the prior low or support and resistance level. You then want to see a higher energy shift in market structure, yeah? So this becomes your market structure shift. And then in this move higher, we're then looking for a retrace either to somewhere around this level or a fair value gap that gets left in this displacement, where we've got a very easy to read setup where we can simply look to place our limit order on the top here. We've got a ready-made stop loss position below this low, right? Because if our theory is correct and we're expecting support from the fair value gap here or the breaker block, whatever you're using as an entry, then we'd expect a bullish reaction here. If price carves through this and takes out this low, there's a small chance we're getting caught in a secondary sweep. But then if you do that and price recovers, then you stick with your original theory. You don't just change your high time frame bias all of a sudden because a move hasn't worked out. It's all about consistency and testing these things over time. And then in this example, we know where our range mid is here. We can see how price interacted with that, right? Found resistance here, ultimately broke above and turned it to support. So they're the kind of patterns that we would be looking for on the lower time frames when we're looking to take entries. But ultimately, I hope what has kind of come across quite clearly today is the fact that we're using from a weekly down to even a 15-minute or a 5-minute chart, we're using these same principles, right? We're reading market patterns, market movements, where there's inefficiencies left in the market, where there's order block, where there's key points of support and resistance, right? I know it's only on a small time frame here, but look, if we look back to this here, we could say to ourselves, okay, well, what's suppressing price here? Price clearly struggling to get above these highs, right? Now, as we cycle through the different time frames, you'll find an order block in here. We've got a very small one here before price ultimately broke down. If we just make an allowance for that, and just draw this across just a little bit here, and we do this in blue, we're just asking the same question, right? We have all of this data here. This is everything that we need. We just need to know on two sides, okay, well, what's capping the market to the upside? What's capping the market to the downside? When we flip these key levels, yeah, so look at the order block. What happened? Price sold off, got an almost perfect retest there, sold off again, sold off from here, big sell-off from here. So now we're saying, okay, we can see the touch points we've had here. If we're expecting resistance when this comes in, if we flip it, especially with ease, we get above it as we do here, we hold it here, we hold it again here, we hold it again here, and again here. We can see the strength. We can see strong resistance turn to strong support. And those principles are basically the same. And then we overlay our execution techniques when we go into that. Now, I wanted to make today's session just a little bit shorter, really kind of focusing on that, because I know from a lot of the trade setups we've had from the last few weeks, which we've had some really, really good ones that have been shared with the community, a lot of what I've been sharing is based around this. And a lot of it is to do with the use and interaction of these kind of higher time frame order blocks, fair value gaps, etc. So I think sometimes people have a misconception when they look at a fair value gap and they think, right, I'll just either long it when it retraces to that, or I'm looking to short it. I think really kind of getting your head in the charts and looking at how price interacts with these, and also how price moves, the dynamics of price. Like with this, right, we can see this strong move lower. We see the fair value gap that's left there. Now, that's telling us that there's either great bearish intent here, that the real orders are flowing in, or the market's being driven that way, maybe by some of the larger accounts, some of the major players, to get people to believe that price is breaking down here, to get them caught on the wrong side of that and utilize those orders to fill their own positions going in the opposite direction. So does anybody have any questions on that before we wrap up today, guys? If not, remember, you can reach out to me at the Nest. There's free trials available in the description below. There's all kinds of goodies and ways that you can sign up. You can get access to the official calls from our trading team for free, just by depositing with our partner Bybit. We also have a decentralized exchange option with our partner Apex too. But you can also reach out to me on Twitter as well, guys. And obviously, we're going to be back on Wednesday to do our alt request Wednesday. So if you've got any alt requests, if you've got any traditional market assets, maybe you want to take a look at the S&P 500 or the mini contracts on ES, or maybe some currency pairs. Obviously, over the news-driven weeks, EU, the British pound at the moment is in an interesting place with inflation being an issue over here. The Bank of England raising, 50 basis points instead of 25, for example. Craig, yes, of course, buddy. For the example you show, yeah, please let me know if you've got any questions, guys. I'd be more than happy to answer them before the end, and then might actually get away with running one of these Monday sessions that doesn't row on for over an hour. What draws down for the secondary test? Okay, so I'm not sure I get exactly what you mean, mate. Apologies. So with the data that we've got on the screen at the moment on the 15-minute, yeah, are you then looking at this part here? So once we broke above, what's kind of drawing price down? And let me answer that. If I get that wrong, then please pitch it to me again, Craig. So I'm probably a bit slow this morning, being a Monday. But if the question is, once we kind of break above a key level like this, and then we start to hold it, this one, sorry, Craig, what the example or the on here? Okay, I think I understand this. So let me try this. So if you're talking about this example here, we get this breakout. What encourages price to kind of retrace to these levels? Well, the truth is as well, we don't ever really know. Yeah, perfect. Thanks, mate. No, that was very clear. The truth is we don't know. What we have here is a system that, for me, for example, I'm basing this on energy and balance. Yeah. So in terms of an energetic move higher, yeah. So we can, let me just delete some of this stuff here and I'll show you kind of like a chart-based example. It's not the cleanest, but I don't like cherry picking these things. I think we should really kind of just work with the data we've got in front of us. If you have to trawl back through a chart for days or weeks looking for a setup, then it's probably not that repeatable. Well, if you're a low time frame trader, obviously. So as we've got here, right, what happens? Price comes down. We see this wick here. What does this wick serve to achieve? Well, we have this resting liquidity below here, which is taken here. So we have a liquidity sweep here, right? Now, when we get that liquidity sweep here, we're then looking for our shift or break in market structure, all right? So when price moves above here, we're then looking for a high energy move that, for me, signals that the buyers are willing to step in, that the market is looking to make that move. Now, why do I want to target a fair value gap? Because what I don't want to do is I don't want to jump in almost like a kind of FOMO move, if you like, as the market's aggressively expanding. Yeah, I want to target an area that gives me a good risk to reward. So something I like to do is take, again, the displacement leg here, right? And I'm going to take from low to high. And how do I know when to stop? Well, I wait for the first down close candle, yeah? And then I look for the corrective move. So then what I'm looking at here is this. Right, here's the fair value gap. And why have I picked this one? Because this is the one, and I'm just going to do this in, say, bright orange, so it stands out a bit more, right? And I'm just going to replay to here quickly and show you a couple of ways that you can approach this. So as price moves up here, we've got our bias intact. We're expecting this higher time frame fair value gap to offer support. So once we've got that premise in place, we don't want to mess around with it, right? We're saying and we're sticking to our strategy. What we want to do is spend a lot of time and energy back testing these ideas so that when they happen in real life, we know we've got data behind us. When you've got hundreds and hundreds and hundreds of trades and ideally thousands under your belt, you will understand how many times this works over time. And the key thing with trading, which is one of the biggest misconceptions, is that what we're doing is this is a game of probability, right? And a game of risk. It's not about being right all the time. And in fact, some of the people with the highest win rates struggle to return good risk to reward. Look at someone like Berg. He's conducted maybe 3-4 trades this whole year. He's had 2 wins, 2 losses. His 2 losses were very, very small. His 2 wins, I think, are approaching $600,000-$700,000. And that's because he understands his trend system. He understands that he'll be wrong a lot more than he'll be right. He can have a 30% win rate, but because of the risk to reward that he implements when he catches the trend, his returns far outweigh his losses. For me, I'm much more a short-term frame trader, so I'm looking to open and close my trades within a day. So understanding current price action is the biggest thing for me. So within this, I know that I've got a good risk to reward. I've got my high time frame bias. I'm looking for a high energy move that's swept liquidity. It's within one of my kill zones, as you would call them. This is the New York PM session, which is in red. Price has swept liquidity, shifted market structure with high energy, yeah, and then price comes back to fill this inefficiency here and then move higher. So in terms of what can cause these moves, there's a few things. One, the original move higher, yeah, is going to take out people's stop losses, right? Those orders can then be filled by people going in the other direction that causes a slight pullback. You also get where people are taking profit on these moves. The other side of it as well, though, is that you do get a lot of manipulation in the markets. Now, There's the idea that when you're looking at kind of the power of three, yeah, which is your consolidation, your manipulation, and then your expansion, there's a part of that that's like a sponsorship move, right? And what that means is this move that generates here to take out liquidity resting below these lows, yeah, they can often be institutions or major players forcing the market in that direction to execute their will. Yeah. So they're willing to be wrong. They're willing to be offside. Yeah. Meaning that people here are shorting the market aggressively to basically change the balance and start convincing people the market's going lower. What does that do? That convinces a lot more people to open short positions, which means they can fill their larger buy orders, right? Now, think of it like this. So let's just say, for example, from here down, that move is a manipulation, right? That's an engineered move by larger players to drive the market lower, take out these stop losses we talked about, yeah, clear out any resting liquidity below there, before ultimately they fill all of their big orders and you get this big move higher, right? This move down could then be considered mitigation, right? Meaning that basically they're still offside here. They've got a lot of orders that they pushed down to here that they haven't managed to close all in time. The market's expanded higher. It's started to bring buyers into the market. Anyone that gets late into this move, yeah, so say someone jumps on board here, puts their stop loss under here, the people that kind of get involved in the move up here, maybe they get greedy and they put their stop losses here. So this move down, the mitigation move, does two things, right? One, it brings price back down to here. You know, this is the area we were discussing, right? That if they've manipulated this move, this is where they're offside. By bringing price down to here, they can then close all of those aggressive short orders at a minimal loss and then look at the reaction that happens afterwards, right? It catalyzes this boomerang effect that price comes back and then shoots off aggressively back the other way. And that's what you would call like a mitigation move. Now, what we'll notice is, let me just take replay off for a second. And what we'll notice is that you don't always get that move, right? So again, this is why it's very much about understanding the system over time. Yeah, there's a guy actually, I don't have any association with him, but I used to speak to him a few years ago, really, really nice Aussie guy called SMFX. Yeah, I think him and I spoke years ago about this idea. I had this thing called a breaker block. He calls it a broken base, I think. Yeah, broken base. And he's the one that speaks about it very clearly in these terms of this mitigation move, right? They're kind of all born out of ICT principles, yeah. But I would definitely recommend checking his stuff out. Really friendly Aussie guy, does a lot of stuff on YouTube. But basically, let's look at this example here. You see on this one, we get this move higher, yeah? Price mitigates and then builds. Well, we have a similar situation here, but where the price action was just so aggressive, right? Look, same principle. We're within a kill zone. Price sweeps liquidity here, same as we swept liquidity here. And then we're looking for a high energy break of market structure, which we get here. Get that expansive move higher. So when price comes up to here, we'd be looking for price to settle and then draw back to one of these fair value gaps. Ultimately, it didn't do that. And the momentum was just so strong that it really took price away from you. So again, this kind of then comes back to looking at your entry techniques, how many of these you get, how many of these you miss, yeah? Because you could have a breakout technique for this, for example. So you could say to yourself, all right, well, actually, if your conviction's really high, then maybe you enter on the close of this candle. Or as I used to have a system here, a much kind of simplified version of this, if you were to call this your breaker line, yeah, then when price closes above this, I'd put a limit order on this level and wait for a retrace. As you can see, we kind of just missed it in this example here, but that's why, again, with data like this, it's not always kind of cut and dry, unfortunately. It really is, as you know as well, Craig, because I know we've had some good conversations about it online in the chats, is, you know, it's about taking this data and really, really kind of testing it over a long period of time. But really, really good question. What does cause that pullback, which is this move here? It can be a mixture of either mitigation from larger accounts, so you have the manipulation, the mitigation, so they get out of their positions, because they might need to put tens of millions of orders in to flush this market down to here before they then feel even bigger orders on the way up, right? But at the same time, as price takes off here and they're still short, they're deeply underwater at this point. So price really pulls back. When we see a move like this, where you just get that immediate aggressive expansion, there's always the chance that institutions or major players have filled their orders here in the first place. So they're just holding on to these, waiting for the price action to chop out. They see this small range forming. Here's your consolidation. There's your manipulation. Price pops out, and then you get the expansion higher. All right, guys. Look, I really hope this has been useful and not too rambly for you all. Just kind of really wanted to double down on my thoughts on fair value gaps. And actually, one thing I should say is let's just take a really quick look at current price action before we close off the stream. We're entering into a really interesting point here. If we look at what we were looking at here in terms of our analysis, let's just kind of get rid of these. We know these are the two paths that we're looking to follow, right? So what could we look for here? Well, remember, as we did on the 4 hour, right? We were expecting price to hold this on the 4 hour. It's not done so yet, but it also hasn't lost it. So what could we do to add a little bit of extra information here, right? Well, we're on the hourly, right? So what's happened here? Price has broken down and taken out these lows, okay? And it's coming to this consolidation. There's order blocks in here that price is finding support. Now, if we're expecting price to really get back above and push on from here, then let's overlay the same principles we've just been discussing, yeah? We've got this really clear and obvious bearish fair value gap here, which I'll just leave in red, yeah? We can also see a slightly smaller one here as well, right? So if I want a little bit of assurance that price is going to really push up from here, we can see we're coming from London session here. We're going to slightly move into New York. If I see, and let me now drop down to just a slightly lower time frame here. Right, so now we've got this and we can utilize this as a base, right? Look, price has tried to shift lower, it's gone back up, it's still holding this higher time frame fair value gap. So what we want to see here is price set a clear high, yeah? Then you want to see a high energy move above that and then monitor the reaction that we get when we get this pullback here, if we get this pullback, right? So break of market structure, yeah, so we're coming low, higher high, higher low, high energy move above. Let's see if we get any displacement in here, like a fair value gap. And we can do one of two things. It will do this in green just to show this is the box that we'd look to take our longs. We can either long here with our stops resting under here, targeting first of all this higher and then ultimately higher time frame targets. Or we could drop down to a lower time frame if you do have experience trading lower time frames. Yeah. And within this move, we could then look on, say, a 2-3 minute chart and wait for this move to again replicate itself as what we would call like a double confirmation move. And actually, I'll touch upon the idea of confirmation trades and double confirmation trades on Wednesday, and we can always fill it back out again on a Monday. Sebster, great to see you on the stream, buddy. I hope you've been keeping well. It was lovely meeting you at Beacon. Right, guys, so I'm going to cut it there. Short of an hour, not by much, but a little bit. I do hope it's been useful. Please don't hesitate to reach out if you've got any questions. I'm going to be back live again on Wednesday with everyone. Let's take a look at how this kind of transpired. Ultimately, if we don't get this long set up and price starts breaking down and then holding back below this low, I think we could be looking for that kind of deeper correction lower. So let's see what the markets give us, and let's keep an eye on that New York Open as well, which normally brings a nice bit of volatility in that we can all use to our advantage if we get our patterns. All right, guys, have a fantastic week. Happy Monday, everyone. Thank you so much to everybody that joined the stream. Do reach out. You can find me BC_Richfield on Twitter, or come and join me over at the Nest. Have a fantastic week, guys, and I'll catch you on Wednesday.